The next question was around how did Keith conclude recently that the US dollar established a big higher low on a trend basis? AK, can we review some signal strength? So that's what this slide's really all about. So again, Eric, if you don't mind kind of expanding that a little bit, not that people don't want to see my face, but it'll be a little bit easier if we kind of zoom in on the chart a hair. So at the, as of the morning of the macro show on, I believe it was November 1st is when he said it was a big higher low. The low end of the risk range, as you can see, I kind of try to make it as straightforward as possible. So, the visualization here is, the question or the comment was on the morning macro show on November 1st. So basically I wanted to kind of give you a visualization of like the price was only on as of, October 31st there. So that closing price was, I think, around 111 or so, 110 and change, right? So that's kind of where you got to visualize kind of like, okay, we haven't seen the next move higher there in terms of the 3-4 days afterwards. But the low end of the risk range at that point was 109. I believe it was 109.24. Yeah, 109.24. And then the following week, or the earlier week, he gave us the trend ranges on October 27th. So the trade range on the dollar was 109.01, and the trend was 103.47. So I kind of highlighted where the trend line was there that he gave us on October 27th. So you kind of have all that information as you're going into that macro show. Now, what he's really seeing here is 109.24 was the low end on 11.1. On 1027 is 109.22. So, the low end of the range kind of over the course of 4 days there, 4 days, hadn't really moved. So it was basically still very much kind of intact and very much, putting in a lower high above, or like a low, above the trade line of 109.01. So I'm trying to keep this as simple as possible, but it is kind of complex. And now the other cool thing here too is that the most recent lows there on kind of a trending basis. So if you kind of go back and pull this back in terms of like, how do you gauge a really strong signal strength? That would be, so those the most recent lows there were back kind of, and they're well above trend line, and the trade, or the immediate term trade, risk range, is nowhere near those lows, right? So your possible low is kind of 109.24 in that day. And that's significantly higher than those recent lows there that you saw that were in that purple box. Now, again, if you kind of flip forward and you then take a peek at the risk range on November 2nd, you see that low end of the risk range go from 109.24 to 109.42. So again, all of a sudden it moves up significantly, moves up almost 20 cents there. And then the following day on the 3rd, it goes to 109.70. And today 109.73. So again, that's kind of what he was seeing, right? So he was seeing that the low end of the range was a big higher low. And we then also the signal started moving higher, and he was almost kind of, perhaps front running, or kind of, looking ahead as to what, where that risk range could be headed. But that's what he really meant by a big higher low.